Hey, good morning, everyone. What's up? What's up? Hope everyone is well, having a good week this week. Also doing fine here in the office as usual, watching our trades and also running our programs that we normally have here at Financial Hub. So all of them are going well. We've met a couple of people this week. We had a good session on Monday in our free induction program where we got to see meet a few traders, some people also starting out in the Forex. So always remember, if you want to book for one of those free inductions on either Monday or Friday, you can let me know. Always book early and contact us, and we'll give you a day when the session has not been fully booked and you can come. So with that said, we can jump straight into the markets. The main reason why you're all here. Let's look at a few things we have on the markets. If you have a few questions, please ask on the chat group, and we'll be sure to answer you either in the chat room or after the session. So jumping off straight into the charts, I still have my trade running on USD card. So I took this trade last week on Friday during the Zooms, just after I finished sharing my analysis on the Zoom session. I remember Ken saying that he had me take the trade, and that's the trade that I've been taking. So what's my analogy behind it? So we've covered those USD card for a while now. Basic lower lows, lower highs, lower lows, lower high formation. We got another bounce over here. I didn't get this entry over here because I still didn't have that trendline bounce. We covered that a few weeks back. So what I was waiting for, there were two entries to actually enter this market if you did not get this up one. So this first one was here. This is the daily chart. Okay, so after this breakout, this retest, after this shooting star close, here was the other entry, and the other entry was this level. Okay, so this is where I got now my entry. That's where I got my short. So if you go to the 4-hour chart so that you can see it more clearly, so the basic analogy behind this was that market was moving down. This was acting as the support level. Market moved back up. We shot all the way down, broke that level, then we came back retest. So we retested this key level, this value area, because you can see this is how it's a level that has been supporting. So once we broke it, I was waiting for that retest to go short. So I didn't participate in this long because my bias was very long, and on Friday that's how I got my entry last week. So this week we started moving down, then we got this pullback later yesterday, and immediately we got that sell off when the dollar continued falling further down. So I got my entry around there. I have this trade running at the moment. It's risk free, so meaning I don't have, if it goes against me, I've locked in some profit. So when I got my entry over here, I remember I had my stop loss. Just a sec, let me show you. Okay, it won't. Anyway, I had my stop loss around above this level, and was expecting market to continue going down. So you can see I used Elliott wave at the back of my head, so I was counting these waves as well. So this was first wave, second, third wave, correction, fourth, so fifth. So just watching that, we can see now yesterday market was correcting back to this level, so it offered another good entry at this point, and market now came that sell-off that we are looking for, and market continued going back down. So I'm expecting it to continue going down. My target is about 50 pips from where it is. So that's a quick 50 pip target. I'm already in profit about 100 pips. So basically the risk reward ratio, I had about a risk reward ratio of about 1:3 on this trade, which is a very, very good risk reward. So that's the trade I have running on this one. I've locked in profit, so it's a risk-free trade. If I go to USD Aussie dollar also a good pair that has been forming good patterns of late. So this is the 4-hour chart. If first go to the daily chart, what we're looking at is that we're having a double rejection of this support level. So I'm watching this level. So if you're trying to understand how I normally trade, I'm just looking at the market structure, the candlesticks are forming, the candlestick patterns, key levels being rejected, using that in line with Fibonacci. So keeping it simple and straight to the point. So we're looking at this level. So my ideology behind this is, as long as this level hold, I remain to be very bullish on Aussie dollar. But if this level is broken, just like what we're covering on USD card, if a level is broken, now it will act as support. Currently it's a resistance. So as long as we're above this level, we're looking to continue pumping with this pair to the upside. 61.8 is what is also helping this market hold at that level. And if you go down to the 4-hour chart, what you're clearly seeing is that we also had a channel formation, sort of a channel formation. Just a sec. So you can see we sort of had this channel formation, market came down, so we broke out of it, we came back up, got this third trend line bounce. This was last week. This was a very, very good sell. Market fell all the way down, and now we've gotten this sort of double bottom that we are seeing on the daily chart, as well as a retest of this level. So that push came in late yesterday after the New York session was open, and we're seeing this market coming back up. So if we continue the upward movement, as I said, I'm waiting for this level to be broken. Once we get that level broken, the pattern that will form, we'll start looking for an entry in that one. So you don't just want to enter a market because it's moving up or down, because that's what most people who are starting off trading normally do. When they just see the market moving up, they want to enter. Personally, where we've reached in our trading career, we know that we were looking for those value trades, something we're understanding, not something we're chasing. So that's what I'll be looking for. So it's also good to be very patient, look for that market analysis. So in the meantime, the main thing we normally tell people is learn about the markets. You can buy a book, you can buy courses, understand how the market works, not just trading all the time. So this is what I'm watching on this. I'll be waiting for that 1 hour chart. I had a trend line which was broken later early on today during the the Asian session. So when the market is forming a trend, you want to always follow what turning points are forming. So when we got this bounce, this was on Monday, when market started moving down, because I didn't have this trend line at first, it was sort of at this point. So I was waiting for market to come and get maybe a third bounce here and move further down. But we got this bounce, market just started turning. So you want to create another trend line. That's what I did. I got this trend line, and we got that second bounce. So we tried coming to get that third bounce, but market rejected it. We've broken up, so now I don't have any use for that. So what I'm watching is this trend line. Okay, so if we are able to get this, so we'll wait for that sort of breakout. We can get a retest, or we'll see if market can also bounce off this level, because it's a possibility. Anything can happen in the market. So I'll be watching that level to see if market will reject it and move further down. Okay, but in the meantime, I'm still watching to see if the bulls have it, and so that I can participate in it. So I'm normally patient, just watching what pattern will form, then I'll see what to do once market gives me that. So with that said, dollar index, what's the dollar saying? Dollar weakness has been the narrative for the past so many days. We covered this on Monday, I remember. So what I was saying, as long as we remain below the trend line, just look what we're talking about. What we're trading is, I'm not saying it's simple, it's easy, but it's basic. So we follow the trend direction. So the direction the market is trending, we're following it. So as long as this trend line is being respected, we're still looking for the market to continue falling. Unless it's broken, then we start changing our narrative. So I'm not trying to predict where the market is going to go. What I'm just trying to do is understand what the market is telling me and try and benefit on that direction the market is moving. So we got this bounce, market started moving down, broke below this previous support from last week, and market has continued moving down. So I was telling the subscribers, earlier on today, what we're watching is we're watching this level. Okay, so if this level is broken, you can see it acted as a very it acted as a liquidity level back then. Market was spiking it before it shot further up. So now I'll be watching to see how market will react to that level, because if this happened before, then that means it can happen again. So that's what I'll be watching. Maybe if we can spike it, maybe continue pushing up before we break it, maybe consolidate here a bit, or we can break it, maybe get a retest and continue shooting further down. 4 hour chart, clearer perspective, same level I was talking about. This is the level we're watching. You can see this, the commitment many traders had back then. So we are waiting to see if it will still continue here, or people will nullify it, especially with the dollar continuing to fall. The fact that it's broken below this level will show that there's a lot of dollar weakness across the board. And with that said, now you'll see most of the dollar pairs following this trend. If the dollar continues weakening, you'll see this happening on the other pairs. So that's all I have for today. That's the main pairs I trade. Euro USD, just looking at it a bit, also it has gotten that bullish momentum. I don't trade this pair as much, but pay attention to it because it's in line with dollar index. If dollar index is falling, you'll find Euro USD going up, because that means the dollar is weakening, the euro is strengthening. So watch that clearly, and just trade it with proper risk management. So that's all I have for you guys. I leave the floor to Ken. Let's see how that USD card trade is going to pan out. So if you can see, I'm keeping it minimal. I only have 4 pairs that I trade. I look for the pair that has a high probability of playing out, and I execute my trade on that. That's how I trade. I'm not in a rush to make a lot of all the trades, to enter all the trades and have them running so that I maximize on my profit. The main thing is get that pair that has a high probability, put your risk in that instead of putting it all over all the other pairs. And that's what most people do. They want to enter gold, Aussie dollar, USD CAD and trade all of them at the same time. That's where you'll get a lot of confusion. So that's all I have. I'll leave the floor to Ken before time is up, and he'll do the rest of the pairs. So that's it. I'll see you guys on Friday.
So good morning, guys. So on Wednesday, like Caleb said, this is a market not to be really aggressive one. So we're getting quite some surprising moves. So some trends are developing, but really short term. We're noticing the dollar really sinking in lower. So if the dollar, if that's the narrative, then I think all these other markets are being driven by that. You can see the pound really rallying. Some few days ago, we saw Euro yen really skyrocket. Gold is currently at 1918, breaking from the 1900 lows. So trends are developing. We're getting closer to an election. So expect much volatility. Just know how you can position yourself in this market right now. Or probably this is a time to play more defense than aggression. I don't know. It depends on your style. It depends on your strategy. There's some people who really like such market conditions. But you do what you have to do. So this is not our style. This is like, for me actually, this is not the type of market I like. So I'm really keeping it small. I think for the last 2 or 3 weeks, the whole of this month, I've taken very few trades. Currently, I only have like 2 trades running, and also very small position sizing, very small targets again. So not much that I'm looking forward to in this market, at least for the short term. So I'll just look at gold, maybe then I'll look at Dow Jones, and maybe Euro yen, then I'll be done. So I don't have much to be sharing with you guys today. So looking at gold, let's look at gold because I think there's something cooking up on gold. In the daily chart, markets have been respecting this trend line for quite some time. For the last 1 month, like I was saying, nothing much has happened. We've been trading between 1925, 1900, 1930, 1890. A simple zone. Gold normally moves 400 pips on a normal day, especially in these market conditions. And so gold moving 200, 100 points in a single day doesn't make much sense for you to be trading it. You can just be patient and wait for the big moves because they are coming and they're coming soon. Anyway, if the dollar keeps on sinking lower, we could see gold break out to the upside. We could see 2050 easily. We could see 2150 easily. But we'll have to wait for a break of 1950, 1975 to confirm that bullish buyers and to be heavy on it. For now, you can take in small positions for you not to be left with the train. So like for me, I just came in, executed a long position after this breakout. For a long time, I was holding a short bias. But as the dollar keeps sinking lower and as markets keep moving, I keep on changing my bias. So if the markets start moving higher, I like going where the markets are going. So clearly markets have started moving higher and I need to follow what the markets are doing. So this is gold on the daily chart. What do we have? We have this trend line bounces. So we had the first bounce, second bounce, third bounce, and they've been dangling around the pivot level for quite some time now, for almost 20-25 days. If we get this breakout above 1950, we could easily rally to 2050. But as long as markets are within these zones, you can be bullish, but small positions, small targets. Let's wait for the markets to really confirm where they're moving. A breakout to the downside will mean 1750, and I think a breakout is coming soon. So soon. In the 4-hour chart, we've started breaking out to the upside. So markets are pricing in a move to the upside. So if you just look at this descending channel, it's been taken out, and it looks like the bulls have it. So we could see markets rally to 1955 easily. So I have this small position here. So a risk reward of about 1:3. My stop loss is coming at 1900, 1905. I'm looking for the 1955 level. So let me see how this one will play out, probably before the end of the week. But before the week ends, I want to be out of such positions and probably watch what will be happening around the fundamentals which are driving this market. Next, I can look at Dow Jones. So Dow Jones is also quite interesting. I was looking for this sell-off all the way to this level for me to buy it, 28,000 level. And markets were moving lower, but we found some support here and started moving higher. But you can see immediately after London today again, markets have started sinking. So if we can sustain this downward drop, could see markets go down to 28,000, but if we go back above 28,500, then I think that's a good buy opportunity all the way to 29,500, which is the next upside target on this one. So currently in an uncertain zone, nothing much to be done over there. Euro yen quite interesting, so we're getting some bullish moves, bearish moves, so really interesting. So on the daily chart, this is the pattern formation developing. So you had the first bounce, second bounce, and you had this third move to touch it, third bounce. So probably markets are starting in, you're pricing in a move to the upside, probably to 129. You could see markets rally all the way to 129 by the end of the day. And I think this is just the beginning of the move. So I think much of the money will be made between here and there. So I'm watching the 4-hour chart to see if I can get a possible entry. And if you just look at the 124.5 level, there is the probability of an entry at this level all the way to 125.5 and even 126 level, at least before the end of the week, but not a very good trade again. So I'll keep on repeating, some of these markets are not very good positions. So if you're playing them, play 0.5 of your account or even less than 1%, because if you can be patient enough, good opportunities can pan out also easily. So that's what I have. I don't think I'll go through anything else, because in the markets, maybe I can look at GU, which is also quite interesting, I think. So on the daily chart, GU had the third bounce again of a channel. So we had the first bounce, second bounce, third bounce. Then we sat in this consolidation for quite some time. And now markets are breaking out. So the narrative, I think, driving this market again, like I said, dollar weakness, dollar weakness, dollar weakness. So you can see markets are pricing in dollar weakness. And you could get this move all the way back to 1.38 to create new highs, probably even after the election. So towards the elections, you could sit here, then you could get a breakout after the election, or you could start moving, and then after the election, you could take us all the way to new highs. So that's what I have on GU. In the 4-hour chart, we've just started the move higher. So if you came in, we're looking for the 1.3180 level, so about 150 pips from where we are currently trading. And you can know how to position yourself in such markets, but for me there's no entry there because of the risk reward. It's not as attractive as I'd like it to be, and over the years I've learned the value of patience. So if you're the guy who likes taking any trade just for the thrill or for the action, you can take such positions. They're not really bad, but the risk reward is not as appealing. So the decision ultimately comes down to you. So if you look at such a risk reward, it's 1:1. 1:1.2. So for me this is a no. I don't trade such markets. I wait for 1:1.3 or 1:1, 1:1, 1:3 or 1:2.5 or something of the sort. So that's what I have for you guys. Probably when markets get more exciting, we'll share with you some of the views we have, some of the analysis we are watching, but for now that's what I have. And hope to hear from you guys, hope to hear from you wanting to learn. We're still finalizing on the funding program, and we'll see you guys next time. Keep on preparing for the funding program, because if you don't hit some targets, it will be quite hard to retain the account. So work on your trading. Your trading is the only way out. So we'll see you guys next time.